Hi guys, welcome back. My name's Amy Richardson. I'm the founder of Flow Advisory, property tax specialist and accountant, and I'm here today to talk about dividends. I get asked a lot, what actually is a dividend, Amy? Because I don't really know. So in the simplest of terms, a dividend is a payment of the company's profits, and for most small businesses, they will take a dividend on a regular basis and in theory, treat it as a regular salary / payment, and usually this goes hand in hand with a small salary as well. So usually they'll be extracting £3,000 or £4,000 a month or whatever it might be from the business. A portion of that will be related to salary and a portion of it will be related to dividend. Now it's important to note that in order to extract the dividend out of the company, it is pretty simple. So from a practical point of view, you literally just move the money from your business bank account over to your personal bank account. The second thing you need to do is decide what type of dividend is it. So is it an interim dividend or is it a final dividend? And in most cases, you're going to be paying yourself interim dividends, as these are the ones that get paid on a regular basis, albeit weekly, monthly, daily. However often you want to do that, you just need to have the paperwork to back that up. So what paperwork do you need? Well, you'll need evidence that you could actually afford to pay a dividend at the date that you paid it or declared it. So at the point you declare the dividend, you need to prove that you were able to physically pay it and you weren't representing an illegal dividend, which I'll come on to in a second. So in order to pay a dividend, you must have already technically provided for the corporation tax. So if you had £100,000 worth of profit, and let's just stick to 19% now being the corporation tax amount, then technically you could only afford to pay yourself an £81,000 dividend, not the £100,000. Why is that? Because we need to account for the corporation tax on the profit before we distribute the dividend out. So the 100 times the 19% is 19,000. Take it off the 100 gives you the 81. So the 81k is what can be paid out physically as a dividend. But the dividend isn't completely tax-free, and you need to think about how much income tax you might potentially pay on the amount that you've paid to yourself as a dividend. At the time of making this video, the amount is £2,000 tax-free, and we know unfortunately that is being slashed over the next couple of tax years. It's going down to £1,000 tax-free, and after that just £500 tax-free. So you really need to think about the timing of your dividends, i.e. try and get them all in the tax years that are going to give you the most tax efficient way, which would be this year and next. I think it's next when it goes down, can't remember. You need to think about the timing of dividends then, and also make sure that you have the relevant paperwork. Some of the relevant paperwork will be board minutes, so an internal meeting to say yes, we decided to do this, complete this dividend, blah 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 blah, and then also dividend voucher to back that up. So that's essentially your evidence to say we had a conversation to distribute dividend from the company. As a result of that, we've made this payment. This is the dividend voucher that matches up to that payment. Therefore, if you ever get questioned on it from HMRC, then you have the relevant paperwork to back it up and you're not going to get into any trouble for that. How much tax you actually pay then? So the first £2,000 is tax-free. And then depending on if you're a high rate or basic rate taxpayer, it's going to depend on the next tranche. So if you're a basic rate taxpayer, the next lot of tax you would pay up to the 50,000, so 50,270 is 8.25%. Previously this was 7.5, but it's 8.25 from April this year. The next tranche, so being the higher rate tax, that will go up from 32.5% up to 33.75%. And if you're an additional rate taxpayer, that will increase to 39.35% on any of those dividends. It's worth noting, for example, if you have a day job and you're on 60k and you pull out a dividend that's £10,000, then the first £2,000 will be tax-free. The remaining £8,000 will be taxed at the higher rate of 33.75. So do think about, do you need the money when you are acting dividends out of a limited company? Now, just quickly on illegal dividends, This can happen when, particularly when clients don't have a great handle on their numbers, or maybe they don't have an accountant, etc. They're trying to save on costs, but ultimately it ends up biting them in the bum somewhere. So what can happen here is, for example, in our previous example, we had £100,000. We're very prudent and we speak to our accountant. We know we can't spend the 100k. We've got to keep 19k back for corporation tax. So we pay out the 81,000. Now, some people may not do that and they may decide, I've got 100k in the bank. Well, I'm going on a world cruise, so I'm just going to put it all out. And they don't think about the corporation tax element. Now, the issue there is that if you work the numbers through, so the balance sheet, which I'll go into later, the balance sheet says you had a bank account of 100k, you've taken out 100k as a dividend, but your distributable profits, i.e. what you should be able to pay out or what you can physically pay out as dividend legally, is only 81,000. So technically you didn't have the money to pay out the 100k. And that can cause some repercussions and penalties, etc. So it's not worth just paying out what you have in the bank. You need to check either yourself or with your accountant whether you have the funds available within the company to make that dividend payment. Obviously, this is a very high level on dividends. Dividends, by the way, is not just from small companies. This can be anywhere else. So dividend payments you've had from maybe a stocks and shares ISA or, wherever it may be, that dividend income will be attributable to the £2,000 tax-free. So you also need to bear that in mind. It's not just income from one source, i.e. dividends from one source. It's a collective of all the different dividend payments that you've had throughout the year. I hope you found this video useful. Like and subscribe for more. Like I said, I will be publishing videos every single week. Let me know if you have any comments. Put them in the box below and I'll try to answer as quickly as possible. Thank you.